Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod.
Love him to lower interest rates. Other than that, what can I tell you?
The presidential field trip that pitted the White House's numbers against the Fed Chair's facts.
It was almost like a sitcom, that little moment.
This was a little crazy watching it yesterday.
Where does Chairman Jay Powell go from here? A White House advisor who was at this extraordinary meeting at the central bank, OMB Director Russell Vought, joins us.
The Fed needs to be accountable for things that are beyond monetary policy.
He says it's about stewardship of buildings and the economy.
This is not a pressure campaign on the Fed chairman.
And a plan from New York Democrat Tom Suozzi to bring corporate ownership success to America's middle class.
It'll result in some initial dilution of their share price probably, but once they get the tax rate discounted, it'll result in an increase.
Plus, the rest of today's news, from college sports to the sale of Paramount for $8 billion and a little extra.
This has been the most politicized of these things.
100%.
It's Friday, July 25th. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Andrew Ross Sorkin. Joe is out today. Let's take a look at how your role is here today.
Well, thank you very much. We're looking at the construction, and we're with the chairman. So we're taking a look, and it looks like it's about $3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed.
A very rare sight in Washington, a sitting U.S. president visiting the Federal Reserve. President Trump said ahead of the time that he was visiting to check out central banks that he was doing this to look at those renovation projects, which he's been so critical of. Trump has also been publicly pressuring the Fed, of course, to cut interest rates. Trump appeared at the site in a hard hat next to Fed Chair Jerome Powell, and it was quite the moment of, well, awkwardness as the two men went back and forth about the cost of construction. Take a look at this.
You're including the Martin renovation. You just added our entire capital. Yeah, you just added in a third building is what that is. That's a third building.
Well, no, but it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years ago.
It's part of the overall work.
But it's not new.
The president then toured the construction site and delivered some brief remarks without the Fed chair.
The big thing is to get it done. They have to get it done. They have to get it finished. And very importantly, we have to get interest rates lowered in our country.
Speaking with reporters, the president was asked if as he claimed, the current level of interest rates is hurting the country, why he doesn't simply fire the Fed chair now. Here's how the president responded to that question.
Because to do that is a big move, and I just don't think it's necessary. And I believe that he's going to do the right thing. I believe that the chairman is going to do the right thing. I mean, it may be a little too late, as the expression goes, but I believe he's going to do the right thing.
Later, the president posted on Truth Social about the Fed's renovation project, saying, "Let's just get it finished, and even more importantly, lower interest rates!" We are going to speak with the Office of Management and Budget Director Russell Vought, who was with Trump at the Fed yesterday. But it was almost like a sitcom, that little moment, and it was a little not. I didn't like that moment, I have to say, on so many levels.
For Jay Powell, who, by the way, you know, whether you agree with what he's done or what he hasn't, has been pretty steadfast. He understands the markets. I think has been pretty great Fed chair through a lot of different things. I think the mistake with thinking that inflation was going to be transitory last time around probably left its mark on the Fed, and as a result, they are being more cautious about this. Alan Greenspan always said that the only thing he cared about was inflation. The second mandate was something that would take care of itself. That second mandate for watching the unemployment rate would take care of itself if you watched inflation. And I think that's something Jay Powell has kind of followed pretty closely. This was a little crazy watching it yesterday, particularly with the numbers. Jay Powell took out his readers to say, what are you talking about? We haven't seen this. This came from us. Pushed back pretty strenuously and said that's a building that was finished in 5 years ago. It was finished in 2020 or 2021. that had not been included with that.
Well, look, the whole issue here has been unfortunate in that there's been this, I would say, pretext that's been tried to create. And I don't think we've seen this before. I mean, that we've seen where presidents have gotten upset with Fed chairs and tried to push them on interest rates. Sure. We haven't seen, I don't know of instances where a president has tried to find a quote unquote pretext or some other way to either embarrass or in some cases potentially even find a reason to oust them. This whole situation yesterday, this sort of theatrical event to go visit this renovation, which he believes is over budget and therefore, and by the way, over budget is the polite way to put it, right? The less polite way to put it is that what he's arguing, or the president's trying to show the American public, is that not just that they're over budget, but how could the Fed chair have something that's over budget? This is totally outrageous. The way they're doing this is outrageous. I mean, that's what this is all about, right? I'm not saying it is, but then to try to embarrass the Fed chair by inflating the number in front of him
in some
when it was
ways,
obviously not even right.
In some ways, it felt like the pressure was coming down after yesterday, where he said, I'm not going to fire him. I think he'll do the right thing. We'd like to see it lower. The biggest problem is the more the president pushes on that, the less likely the Fed is to follow because they want to assert their independence. That is,
well, I think that's part of it. And the economy has held up. I mean, look, it's very hard to tell the public that the economy is great, and then say, please, by the way, lower interest rates. You have to lower interest rates.
I don't think there was a please with it.
So there you have it.
The Federal Communications Commission clearing the way for Paramount's $8 billion merger with Skydance Media. That deal includes the CBS broadcast network, Paramount Pictures, and Nickelodeon. In a statement, FCC Chairman Brendan Carr said that the merger was an opportunity to bring more balance to what he called the once storied CBS. Skydance telling regulators that it will watch for any perceived bias at CBS News and that it will hire an ombudsman to review any complaints about fairness. That deal's approval followed Paramount's $16 million settlement with the Trump administration over a 60-minute segment last year. The FCC approved the merger by a 2-to-1 vote, the 2 Republicans voting for it, the 1 Democrat voting against it. And in a statement, the commissioner, Anna Gomez, who was appointed by former President Joe Biden, said that Paramount got what it wanted, quote, after months of cowardly capitulation to the White House. The FCC chairman, Brendan Carr, is going to be joining Squawk on the Street a little later this morning, but this is, I think it's a cautionary tale for business just when it comes to the idea of one political party or another putting extreme pressure. You can imagine if the Democrats are back in power, they're going to be putting some extreme power in the other direction on some of these things. And I think that statement from the FCC commissioner who voted against it kind of laid it out. To be politicized in this way is the last thing that business wants.
I agree with you 100%. The only thing that I would slightly disagree with is I think this has been the most politicized of these things.
100%. But if you think you're going to kowtow to it and it's going to be fine,
right.
If there's a switch in the administration, they are going to be just as vociferous and they are going to be just as pushing you in the other direction.
And my hope is that this is such
and by the way, business had to deal with this with a lot of the DEI stuff that came up before.
But my hope is that
it's been increased every step along the way.
I hope that it gets tamped down.
I do too. But we have not seen that. The general direction has been for more and more pressure, no matter who's in power. President Trump signing an executive order aimed at creating clearer national standards in the era of name, image, and likeness rights in college sports. That order mandates federal authorities clarify whether college athletes can be considered employees of their school, and it aims to stop bidding wars for players that have cropped up in recent years. A fact sheet on the order notes that recent court rulings have created in what it calls a chaotic environment that threatens the financial and structural viability of college athletics. It could send some shockwaves through college football and basketball, where player recruitment has become a multi-million-dollar market in recent years, but it has been a mess. There is no question about this. President Trump has plenty of company in thinking that this is a bizarre system at this point. We spoke with Eli Manning about this yesterday, the former New York Giants quarterback, who just pointed out, look, college athletes should get paid. It's fair, but the system, the way it's set up, is chaotic and crazy. You have college coaches who have said, forget it, I don't want to do this anymore. We can't even put a team together the way this happens. And Eli Manning suggested yesterday that maybe part of that would be to put the focus on the portal.
Every year, you're a free agent and you do well. And hey, I want to go to another school is going to pay me a little bit more. I don't think during the recruiting process necessarily that these kids are picking the right place for them where they think they'll be happy. They like the coach. They like the teammates around you. They like the campus.
Which is probably a good idea. Right now, you can trade teams every year if you want to. There used to be more restrictions on that. You could only go in every 2 years, or you had to sit out a year if you were going to do it. If they put some of those restrictions back into it, it would probably slow down the shop around process, where literally a coach doesn't know who's going to be kept on his team. They have to field a new team almost entirely every year, with the pressures that come in from other people, with people trying to cherry pick. And it has created chaos from the fans' perspective, too. You could argue that these are no longer student athletes. These are just, mercenary athletes who are out to get paid the most. And you do think these kids should get paid for performance, but there should be some loyalty tied to the school, too.
Loyalty is an interesting question in this world.
Cheese will be next.
Coming up on Squawk Pod, the hard hat tour that was must-see TV. President Trump's walkthrough at the Federal Reserve Building. We'll hear from an official who was there, Russell Vought, director of the Office of Management and Budget.
This is not an attempt to say this project should be halted permanently. We want to get it done.
This is Squawk Pod.
So we're taking a look, and it looks like it's about $3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed. You're including the Martin renovation. You just added
our entire capital.
Yeah, you just added in a third building. Is what that is. That's a third building.
Well, no, but it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years ago.
So it's part of the overall work.
But it's not new.
Well, those tensions between President Trump and Fed Chair Jerome Powell playing out in real time in front of the cameras yesterday during the president's visit to the Federal Reserve Building. Joining us right now is someone else who was at that meeting, the Office of Management and Budget Director Russell Vought. He was with the president yesterday. And Russ, thanks for being with us this morning. We saw how things played out on the cameras. How was it behind the scenes?
It was a very good visit. We learned a lot. The president learned a lot from being able to see it with his own eyes. He's a master builder. He has had great interest in this project. We learned a lot from watching him as a builder, figuring out the types of things that he would never have done in designing this as a renovation. And fundamentally, the reasons for why this is costing so much. They had good conversations throughout, and we're not surprised that they don't necessarily agree with every of the viewpoints that we have, but these are the numbers that have come from the Fed, and they are entirely correct. This renovation, the combination of all of the headquarter buildings, is a $3 billion, and the overrun just for those two buildings, we want to talk about just those two in the Chairman Powell, the overrun just for those two buildings is $1 billion, and there's some unbelievable reasons for why that is so.
Such as?
Such as, number one, they are putting a tunnel in between the buildings. Number two, they're essentially excavating an entire basement approach in an area of the D.C. the National Mall that we know has problems with water. So you have to go very deep. You have to be able to figure out how you're going to prevent future leakage down the road. And they have a enormous parking lot that they are building into the ground that is something that most agencies don't have. For $30 million compared to the $250 million for the parking itself, you could be able to provide parking benefits for the entirety of the Fed. There's largesse everywhere you look, and there are some fundamental reasons for why this thing has become so big. This is not just restoring a building that needed to be restored for its historical purposes, nor is it the only renovation this building has received. That is inaccurate. This building had renovations at the turn of the century, 1999 or so. And so there's been a lot of work done to this building. This is about doing enormous renovations of an entire headquarter building and largely escaping the notice of the public and Congress.
Well, Russell, that's where I wanted to go with this, which is to say, and I'm all for shining a spotlight on things. Transparency is clearly important. The question that I have as a taxpayer, and the criticism of the Fed in this context, if the criticism is valid, is whether you ultimately think or can specify that this wasn't done in a transparent way. Meaning, was this all some kind of secret that nobody knew? From my understanding, all of this was disclosed to Congress and to the government. It's obviously, we can see it physically happening if you walk by the building. So while it's important that the administration or others, say maybe there's a problem here, or not a problem, but there's cost overruns here, the question about sort of that this is terrible is what?
No, look, the information that we've ascertained, that Congress has ascertained, has become as a result of the oversight process. And we heard yesterday from Chairman Scott the extent to which it's been prying teeth to get this information from the Fed in a way that you would not have if you were trying to get Department of HUD to talk about their building campaign, which hasn't happened, and is why they're having to move. And so as a result of that, we've had to rely on FOIA documents. This material hasn't been in their normal financial statements. This is something that has been at every step a huge labor to get information about what's going on, comparing apples to oranges with regard to being able to hide the extent to which those two buildings are overrun. The totality of this renovation project, begun a number of years ago, approved in 2021, is a $3.1 billion. It is the same levels of if you include all of the Palace of Versailles, if you include all of the congressional buildings from the dawn of this republic to now, this building equals that. That is what we are drawing attention to. And the other thing I would just say is the extent to which they continue to say, look, we've made these changes. They may have made some, but they're still relying on much of the same design. They talk about, there's no private dining rooms. There are meal-ready meeting rooms. Meal-ready meeting rooms are private dining rooms for the executives of the Federal Reserve. And so that is the kind of things we're trying to get to the bottom of. The National Capital Planning Commission will be very involved in continuing to ask questions. But I think what you heard from the president yesterday is, like, we want to get this thing done. This is not an attempt to say this project should be halted permanently. We want to get it done, and we want to get it done as cheaply and efficiently as possible.
Right. But
I think it gets to the degree to the fiscal mismanagement of the Fed.
Right, but Russell, part of what I think a lot of the public sees, and even the investor class thinks, is that this is a pretext to either try to fire the Fed chair or to pressure him effectively to lower rates, and that this is sort of a leverage point in a larger discussion and debate, or a way to distract from other issues that maybe the president's dealing with at the White House. So how do you see that?
You can only answer the question so many times, and the president has done that. He's asked repeatedly, do you intend to fire the Fed chairman? He said, no, it's not likely. I have no intention of doing that right now. And this is about ensuring that the Fed has the accountability of the American people knowing what's going on. Does the president have viewpoints? Yes, he does have viewpoints. The American people get to have a say in what they believe the Fed should do. The president believes that the American people, as the person that is elected on their entire behalf, get to have a say in whether rates are lower. And so if you're at the Fed and you're getting questions about both, of course you're going to answer to both of those issues. But it's also true that the Fed needs to be accountable for things that are beyond monetary policy. Their ability to transmit remittances back to the Treasury that impact our deficit, the extent to which their regulatory activities are supposed to go through a regulatory review process, of which they are not complying right now. So there's a whole host of issues with regard to the Fed, and we want to make sure that those questions get answered over time. This is not a pressure campaign on the Fed chairman.
Russ, let's just dig into that a little bit, because the general take from most people we've talked to is that yesterday, even though it was a little awkward in front of the cameras, was that there was some pressure that was coming down in terms of pressure on the Fed chairman. Is that what you think, too? We did hear from Treasury Secretary Scott Bessent, who said on this program last week that he would like to see the Fed undertake its own internal investigation about, I guess, regulatory stray getting into other areas. Are these just pressure points to say the Fed needs to be looking at all of these things, or is this laying out for a reason for why Jay Powell would not be qualified to do there? The president said that he's not looking to do that, but are you and other people in the administration still thinking that he's not fit to be running this?
The president and the administration have policy views vis-a-vis the Fed on a host of different issues. You saw two of them discussed yesterday. The Secretary of Treasury has opined recently on a number of them. I just gave you a new one with regard to the regulatory review. And we're going to continue to articulate our policy concerns with regard to the Fed's management. And that will continue. You don't get to just be at the Fed and not have any criticism directed your way. That is not something that exists in the American political system. We respect the job that they have to do, that they are called to do under statute, and we're going to continue to represent the administration's perspective. The president will do it on his own behalf, and that is only going to continue on in the next weeks and days ahead, because we see on a host of fronts a lot of mismanagement that is hurting the American people, and they need a voice in this town, and the president is providing that voice on ways that this Fed is holding the economy back from even greater heights.
Russ, do you anticipate that the Fed chairman will be there through his term in May?
Again, the president's been very clear. He has no intention. He finds this conversation very unlikely. And so we are making a policy argument on lower rates. We're making a policy argument with regard to a extravagant, luxurious, costly renovation. And we will continue to make those policy arguments into the weeks ahead.
Steve Leisman was with us earlier this morning, and he posited that potentially what you'd see the Fed do in this next meeting is maybe change their language to say that if it looks like there's no inflation that comes from the tariffs, that could clear the path to lower rates. Would that be enough to satisfy this administration?
The president wants to see lower rates. We will be watching the next meeting very closely. We want to see the deliberations and the kinds of statements and hopefully decisions that get made to lower rates. I think he's heard that from the president yesterday. But this is something that we believe is vital over the next several weeks and months, is for the Fed to recognize what the rest of the country and honestly the world is assessing, which is America is hot right now. The economy has a chance to grow tremendously. We're already growing, and we've got to be able to have our federal rates reflect that so that we can get costs down.
But you do understand the argument that if the economy is doing so well, that's an argument to not lower rates.
Again, I understand the argument, but you don't want to have rates artificially high, and countries across the world are lowering their rates. There's no reason for why we should have artificially high rates and holding back investment in this country and the ability to have lending be cheaper. And that is something that we've got to address. We need a Fed that's willing to look at that carefully. And here's the thing. Part of it just comes from just this town's unwillingness to update their algorithms economically to the fact that tariffs are not leading to inflation like they predicted for decades and kept presidents from doing what President Trump has done, which is to impose tariffs, to protect the country economically, get businesses back on shore. And as a result, they're basically saying something that's going to happen, something's going to happen that hasn't, and they're holding back their fire. And as a result, that's hurting the country.
If you talk to people on Main Street, they are worried about that inflation, and that is something that the Fed has to watch out for.
Well, certainly when you have a national debate that talks about costs being on the rise, when you don't see that in the numbers, what prices go up and will go down. But from a position of the overall inflation level, we're just not seeing that. And we don't expect that to change. We predicted this would not occur. It's not happening. And as a result, the president is being proven right economically. We had a lot of trade deals that are being passed. We're in a very good place on that front. And we're going to see ongoing success, but we've got to have lower rates. And I think that's what you saw the president put an emphasis on yesterday, and I expect that to continue.
Russ Vought, OMB Director. Russ, thank you for your time this morning.
Thanks, Becky.
Next on Squawk Pod, how New York Democrat Tom Suozzi aims to rebuild the middle class with stock ownership redistribution.
In America, we need to start rewarding people who work hard, because there's too many people in our country that are working hard every day and they just can't get ahead. And we need to create more of an ownership society.
Moving around that wealth from a self-styled Democratic capitalist right after this break. You're listening to Squawk Pod from CNBC. Here's Andrew Ross Sorkin.
A bipartisan bill is being floated on Capitol Hill that would incentivize companies to distribute at least 5% of their stock to the lowest paid 80% of their employees. Joining us right now is New York Democratic Congressman Tom Suozzi. He is one of the co-authors of the Share Plan Act. Good morning to you.
Good morning.
It's an interesting concept. It's a provocative idea. Explain how it would work in practice.
It's a big idea. And the idea is that if companies with more than 500 employees share 5% of their stock with their lowest 80% wage earners, they'll get a 3% corporate tax rate discount. So they're only going to do it if it makes sense to them economically. It'll result in some initial dilution of their share price probably, but once they get the tax rate discount, it'll result in
But let's just go backwards for a second. So the first component part of this is some of these companies may have to buy back shares because they're going to need to actually capture the shares
or issue shares
to be able to distribute shares. So they're either going to dilute themselves or have to buy back shares to do this. So there's a genuine cost.
Yeah.
You're saying you're offsetting the cost by
giving
reducing
a corporate tax rate discount of 3%.
3%, 3 percentage points.
3 percentage points. So the bottom line is...
It'll last for how long?
It'll last forever. The bottom line is...
It's a one-time hit and you get a long time.
The bottom line is that right now in America, the top 10% wealthy people in the country own 93% of the stock. The lowest 50% people in the United States of America own 1% of the stock. We have to rebuild the middle class. We've made enormous wealth in America since the 1980s, and that's good, and we should encourage that. But we need to share our success with the people who go to work every day.
I just want to go back. And do some math.
Yeah, okay.
For the CEOs who would effectively have to follow this or make this decision to do this or not to capture the tax rate, the math is what? So their current corporate tax rate is going to be 21%?
Yeah.
Okay.
So you get an 18%.
You're saying you're down to
18%.
If you put this in place for your employees permanently? I mean, so what happens if I do this on a one-time?
What if I lose employees, they take off, and now my 80%?
The employees, you could decide whether or not you want the stock to vest over a 5-year period or not. We think this will encourage worker productivity. It'll encourage worker loyalty. It will make more people in America owners. We want.
Yeah, but do I have to continue to do this? Like if I have employees who leave and now I'm no longer compliant with 80%.
As long as 5% of your stock is owned by your employees, you comply.
But if I lose the employees, then I have to keep issuing more stock to make sure that number continues.
And I'm assuming what you say 5% of your employees. If the CEO...
No, not 5% of your employees.
80%. Yeah.
Lowest 80%.
Lowest 80% of your employees have to own 5% of the company at any given time.
Correct.
Okay, so this becomes interesting / complicated if you're a company like NVIDIA. The cost of this is actually astronomical.
So in the case of NVIDIA and other companies with high market value like that, you can cap the award to $250,000. Now, the average award to your employees will be like $50,000 or $60,000. This will the bottom line is we need to rebuild the middle class.
Look, I understand the policy. I'm just trying to figure out how we can make the policy work. My next question: work so people actually want to do it, and that there's an incentive to do it, and that it works out. You're saying right now this is just for public companies?
No, it's for any companies with over 500 employees. It would mainly be public companies because of stock, but there can be ways for this to work for.
Well, that's where I was going to go, because one of the things that we're seeing a huge trend, and we talk about on the broadcast all the time, is more and more companies are staying private for longer. The real actual money that's being made is actually while the companies are being private before they become public. And so the question is, how do you incentivize those companies to do what you're talking about?
Yeah, I think that the idea is we have to figure out this will go through a lot of iterations, I'm sure. Right now, I have bipartisan support, 5 Democrats, 5 Republicans. including the chair and the ranking member of the subcommittee on tax in Ways and Means.
Right.
And there'll be a lot of debate about how to tweak this to make it work the right way. The bottom line is that in America, we need to start rewarding people who work hard, because there's too many people in our country that are working hard every day and they just can't get ahead. And we need to create more of an ownership society. Right now, the people watching your show, the people that pay attention to the Dow Jones, is a relatively small segment of the American people. We need to expand the ownership society in our country so that people who go to work every day can participate in the great success of this great country.
I don't understand all the details, but I see what you're saying from a broader scale and a position on this. And you see the politics of inequality playing out, not just here in New York City, but across the country. But we have focused on this Mamdani election that's coming up as a result. I know you wrote an op-ed in the Wall Street Journal kind of knocking it down. You're a Democrat who sees things a little differently, but this really plays at the schism in the Democratic Party at this point.
Right. I want to make it very clear. I'm a Democratic capitalist, not a Democratic socialist. And what Mamdani did in New York, much like what Donald Trump did, is tap into the economic discontent of people in the country. Too many people go to work every day and they can't make it. And in our country, we've got to get back to a place where whether you're a left-wing progressive or a right-wing conservative, everybody should believe that in return for working hard, I'll make enough money so I can buy a house, educate my kids, pay for health insurance, and retire without being scared. That's the American dream. Everybody in our country should believe that. Whether you're a progressive or a conservative, you should believe that.
The way to get there is very different. I think a lot of people believe that, would buy into that and say that absolutely. But even within your own party and within Congress writ large, it's really hard to figure out agreement on how that happens.
So that's why a bill like what I have right now, which is a bipartisan bill, let's get Democrats and Republicans to stop attacking each other and start attacking the problems that we face in our country. And the problem that we have is that too many people are working hard and can't make it.
But you find that you have more agreement with moderate Republicans than you do the left wing of your own party.
I have agreement with all kinds of people as long as you look at let's diagnose the problem. The problem is that too many people are working hard and can't make it.
Sure, but Mamdani has said this too. His way of going about it is going to be rent control.
I totally disagree with Mamdani.
Right.
I mean, he's smart, he's charismatic, he's wrong. I disagree with him. We can't raise taxes in New York City. People are leaving New York City as it is. And in blue states and cities throughout the country, our taxes are too high. We're losing population. The 2030 census, we're going to see less Democratic congressional seats, less Democratic electoral votes throughout the country. The blue wall will no longer exist because people are moving to low-tax states like Florida and Texas and Tennessee and other states. Now, I disagree with their policies, but we have to figure out how to make it attractive.
When we bring people in here to talk about New York City and whether they're losing population or not, they'll say, no, we're back. It's not as bad as it was 2019. But you brought up a really interesting fact about population since the 60s.
Yeah, when I was born in 1962, I'm 62 years old, be 63 later this year, there were 45 members of Congress from New York State. Today, there's 26 members of Congress from New York State, and it's going to go down in the next census unless we figure out how to reverse this trend. Because since we lost the state and a local tax deduction, which is a body blow to New York and other high-tax states, we're continuing to lose population from places like New York, New Jersey, Illinois.
Relative to what you see the population growth in other parts of the country, which is how Congress is based on those.
Correct. Right. And the electoral votes as well.
Yeah.
Tom, I'm getting a whole bunch of texts and emails about your plan. I want to go back to the math, because this is actually an interesting thing, and maybe you can respond to it. I think it's important, given that we just talked about it. If you look at these, the two examples, Amazon and Walmart. Now, obviously, these are two big companies, but the cost to them, 5% of their market cap is basically, 5% of Amazon's market cap is basically $100 billion. Walmart would be $26 billion. The tax break to them for something like Amazon would be close to $1 billion a year. So if you have $100 billion, you got to give away to the employees, and the only benefit to you economically is $1 billion in year one. Let's say and let's say you amortize that over 20 years. You're still $80 billion in the hole. So if you did Amazon, if you do Walmart, by the way, the situation's not materially better. It's $26 billion is what the market cap, 5% of their market cap would be, and on an annual basis, they might save $900 million from this tax break if it works. And so even if you amortize this out, it would take you 100 years
So
to pay
companies
for
with
this.
high market caps can cap their award at $250,000 as opposed to giving the full 5%. They'd have to decide. First of all, this is not a mandate. This would be a decision that companies
can make that on their own.
Whether it makes sense for them economically to do it.
Right.
I believe that companies will decide to do this because it will encourage employee loyalty and productivity as well, and because it's
But it is subsidized by the taxpayer, as any tax incentive.
It's subsidized really more by the existing stockholders because you'll see dilution of their shares in the beginning.
Yeah, but the lower tax rate.
All I'm saying is I think the companies that you want to be doing this are actually not even the big tech companies. You actually want the Walmarts and you want the factory worker at Amazon who's delivering your package, and the folks at Walmart, they're the ones you want getting the stock.
Yeah.
And so the question is, how do you make this an economically feasible proposition to the company? And I think that's a very hard thing to do with this.
And that type of conversation and that type of provocation to get people thinking about this is what the big part of this
Tom,
goal
can
is.
I just throw in one other potential unintended consequence? You are making it an incentive to put a lot more robots into place and to automate things so that you don't have as many.
Well, we're going to be seeing a lot more
off.
robots, and we're going to be seeing a lot more AI, and we need to create more of an ownership society so that people can participate in economic success of our country. Right now, we have a very.
I'm okay with that because it's just not going to. If it's optional for a company, then they're not going to do.
The whole thing is optional,
robots.
and the idea. And let's figure out more ways to make the middle class rebuild in America. Let's figure out for people aspiring to the middle class and in the middle class that they can have a decent life, that they can participate in our great success. When we went through this whole thing with Milton Friedman in the 1970s and said, stop worrying about the employees, stop worrying about the community you're in, and just worry about the shareholders.
Right.
It created enormous wealth in our country, but we decimated the middle class in the process. We have to rebuild the middle class in our country. This is an idea to try and get there, and I hope it will provoke a lot of ideas and a lot more text to you.
I like the provocation. Thank you.
That is Squawk Pod for today and for the week. You made it to Friday. We all made it. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern. Follow Squawk Pod wherever you get your podcasts to get the very best of our show in an easy-to-listen-to podcast. And let us know what you think. You can find us on X at Squawk CNBC, or if you're a listener, write a brief review of Squawk Pod on Apple Podcasts, or even make your voice heard in the YouTube comments. We love to hear from you. We'll meet you right back here on Monday. Have a great weekend.
We are clear. Thanks, guys.